Hello, everyone. Welcome to week 5 of the Business Certificate series presented by the Westminster Center for Financial Wellness. My name is Alex Puente-Tacias, and I will be guiding you through today's session. This week, we will consolidate our knowledge and prepare for continued use of QuickBooks. By the end of this session, you will have a clear understanding of inventory management, financial reports, and how to apply everything we have learned. This week, our goal is to reinforce everything we have learned so far. We will review key concepts from previous weeks, introduce inventory management in QuickBooks, answer common questions through a course review, and discuss next steps for mastering QuickBooks after this course. This will help you feel more confident in using QuickBooks for business operations. Here's a quick outline of today's session. We will first start with a weekly review from week 4. Then we will include this new concept. Then we will have a course review. We will reinforce our financial and accounting concepts. And finally, we'll have an activity and we will show you which steps you could get for continued learning. Let's start with weekly review for week 4, where we were focusing on 3 important features in QuickBooks: payroll management, sales tax, and budgeting. Let's take a closer look at payroll in QuickBooks. We will start with payroll as the first key concept we had in the last week. And remember what we have learned: how to set up payroll by adding employees and tax details, the importance of accurate payroll tax calculations, and how QuickBooks automates paychecks and tax filings. Recall, payroll is essential for business with employees, ensuring compliance and accurate compensation. Next, we reviewed sales tax in QuickBooks. And the key takeaways from that was that QuickBooks helps business assign tax rates based on location. Sales tax automatically calculate when creating invoices, and reports like sales tax liability helps businesses track and pay tax correctly. This feature is crucial for business selling taxable and good services. Another powerful tool we explored on week 4 was budgeting in QuickBooks. And remember, budgeting is important because it helps business plan for future expenses, compares budget versus actual financial performance, and allows businesses to track financial progress over time. By using, for example, the profit and loss budget versus actual report, businesses can make smarter financial decisions. Before we move into new topics, let's take a moment to review to make sure we know the key highlights from this week 4. These advanced tools to help business like payroll, sales tax, and budgeting, how they enhance financial management, and how they make sure a better efficiency and compliance. Now that we have reviewed last week's key topics, let's move into our new concept: inventory management in QuickBooks. Not all businesses track inventory, but for those that do, QuickBooks provides powerful tools to manage stock efficiently. So in the next section will cover how to set up inventory tracking, the difference between inventory and non-inventory businesses, and how to monitor stock levels and generate reports. Now, let's introduce first this new topic. Inventory management involves tracking and managing stock to make sure businesses have the right amount of products available. And it's important because it helps maintain accurate financial records, ensures smooth business operations, and prevents overstocking or running out of products. Some businesses handle inventory daily, while others may work with non-inventory services. Let's see how QuickBooks helps manage both cases. To manage inventory in QuickBooks, you have to follow these steps. Enable inventory tracking. You will have to go to settings, company settings, and turn on inventory tracking. You will then have to add inventory items and then categorize these items. And this all setup allows QuickBooks to automatically update stock levels as you make sales and purchases. As we said, not all businesses track inventory. If your business provides services or custom goods, QuickBooks offers a non-inventory option. And key benefit of non-inventory items are that are used for services, digital products, or customized goods, helps with invoicing and reporting, and simplifies bookkeeping for service-based businesses. With this feature, you will ensure that even businesses without physical products, they can manage sales efficiently in QuickBooks. Once inventory is set up, you can track and adjust stock levels in QuickBooks. Monitor stock levels and get alerts for low inventory. You can adjust inventory manually for lost, damaged, or stolen items. You can run inventory reports to track stock usage and profitability. And with these tools, businesses can stay on top of their inventory and avoid stock shortages or excess supply. Inventory reports provide valuable insights for business decisions. Common inventory reports involves inventory valuation summary that shows stock value based on cost, sales by item detail displays which products are selling the most, and then a stock status report helps track inventory levels in real time. So these reports help businesses owners optimize stock, reduce cost, and improve profitability. Managing inventory manually can lead to mistakes, and QuickBooks simplifies that by automating inventory tracking, integrating with invoicing and purchasing for accurate financial records, and providing real-time insights to make better business decisions. And this makes inventory management faster, easier, and more efficient for businesses. Let's see a real-world example of how QuickBooks helps business track inventory. For example, a retail store will use QuickBooks to track stock and sales, will run reports to analyze best-selling products, and as a result, they will have improved efficiency and higher profitability. And that's an example of how QuickBooks helps businesses stay organized, and maximize profits. Even with good inventory management, problems can happen. So let's take a look some common issues and how to fix them. For example, you may have incorrect inventory levels, and as a solution, you will regularly reconcile inventory with physical stock. Another issue it can happen is outdated inventory data, and you will use real-time tracking and update inventory frequently to resolve that. Run inventory reports often to monitor trends and prevent errors is a key tip you may have to follow. Effective inventory management keeps your business organized and efficient, as we mentioned before. And here are some key practices to follow. You can organize and check database to keep inventory records structured and updated. You can log orders quickly to enter sales and purchases immediately to avoid discrepancies. You can use barcodes, scanning items for faster tracking and fewer errors. You can handle returns fast. You can cross-check inventory, and you can monitor stock levels. In QuickBooks, with the simple plan, it will allow you to track purchases and sales, but advanced inventory tools like barcode scanning and stock level tracking require an upgrade. But understanding this practice will help you manage inventory effectively, even with limited tools as you can have with the simple plan. And now that we have covered the basics of inventory management in QuickBooks, let's take a look how the system helps businesses track manage their stock, because we have been explaining a lot of stuff, but through this video you will be able to understand what's behind this content. You should be aware that with your current plan, the simple start plan you have, some advanced tools like tracking stock levels and automatically updating inventory is not available, even though it's important to understand how QuickBooks inventory system works in case on the future your business grows, you may consider upgrading to unlock these features. So let's watch the video and then I will show you how you can still manage inventory with the tools available in your current plan.
This is Annie from the QuickBooks team. If you are using QuickBooks to manage your inventory, then you can order new inventory whenever you are running low. Let's go over how to order and account for new inventory using a purchase order. Then we'll go over what to do when you receive your new inventory. Finally, you'll see how to make adjustments to your inventory if QuickBooks thinks you have more or less than you really do. If you haven't already created inventory products in QuickBooks, you'll need to do that first, and this video can show you how. To start, select Products and Services. Note, your navigation may look like this. Here, you can see which products are low or out of stock. If you see a product you need to reorder, select the arrow next to Edit and Reorder to open a purchase order. If you want to include multiple items on the same purchase order, you can select them all. Then under Batch Actions, select Reorder. If you don't have purchase orders turned on, you'll need to do so before continuing. Select the vendor you want to order from. If you set up a preferred vendor for your product, you'll see one selected already, but you can change it if you need to. The shipping address is your address. But if you do drop shipping and you want your order delivered directly to a customer's address, you can select the customer under Ship To. Fill in Ship Via if there's a specific carrier you want your vendor to use. Under Item Details, enter all the items you want to order. Enter in the quantity you want to order. Notice that if you hover over this, QuickBooks will show you how much you have on hand, and your reorder point. You can adjust the rates and amounts for individual products as needed. You can also add more products to the PO. Just select them from the drop-down menu, or add them if you don't see them. You can also add a message to your vendor, or add an attachment. Once you're finished, you can save and send to your vendor, or select another save option and send it later. Here is a customizable email that QuickBooks will send to your vendor, along with a purchase order. If everything looks good, select Save. If you go to Vendors, you can see your new purchase order listed here. Once you send it off, your vendor can start processing your order. A purchase order itself does not change your inventory levels. It's just an order with your vendor. When you actually receive your inventory from your vendor, you'll need to record how you paid for it. You can enter it as bill or check, depending on how you are paying for the inventory. This is what actually adjusts your inventory quantity and handles all the accounting. If you've received and paid for the inventory already, then you enter a check if you paid by check, or an expense if you pay by any other method. If you haven't paid yet, and your vendor has given you a bill with a due date, then enter a bill. These methods are all very similar. For this example, we'll enter a bill. But there are videos with more details on how to record bills, checks, and expenses at the end of this video. Select your vendor. Since you have an open purchase order with them, you'll see it over here. Select Add to add the details of the purchase order to your bill, check, or expense. If the amount of inventory you received, or the price you paid for it, is different from what was on the purchase order, you can change it here. Once you are finished, select a Save option. Now, if you select Products and Services, you'll see that QuickBooks updated the inventory quantity based on your purchase order and the following bill. One final note about managing inventory. If the amount of inventory you actually have on hand is not the same as what's in QuickBooks, you can make an adjustment. Select the arrow next to the product and adjust quantity. You'll see the product here and the amount QuickBooks thinks you have on hand here. Enter in the number you actually have here. Then choose an Inventory Adjustment account. This tells QuickBooks where the value of the missing inventory should go. The default is inventory shrinkage, but you can create a more descriptive cost of goods sold or expense account for things like theft, spoilage, or charitable contributions if you prefer. This will affect your financial statements, so you should consult your accountant before doing this. Once you are finished, select Save, and you'll see that QuickBooks has adjusted your inventory. Now you're ready to start managing your inventory with QuickBooks.
Even though you don't have a full inventory tracking in Simple Start in your current plan, using non-inventory items will help you manage your sales and expenses efficiently. So at the end of this week 5, we will have an activity where we will show you how to use these non-inventory features. It will be included in your canvas and you will have access to it to work on the activity and to learn about this non-inventory feature. Before we move into the questions answers section, let's quickly wrap up what we have covered so far. Throughout this course, we have explored essential QuickBooks features, from setting up your company file to tracking transactions and running financial reports. So let's first refresh some basic stuff. On the modules 1 and 2, we were focused on foundational steps for setting up QuickBooks. Remember, in week 1, we have covered setting up the company file, including key configurations to make sure accuracy. And then in module 2, week 2, we talked about connecting bank accounts, which helps automate transactions and improves efficiency. These initial steps are crucial for making QuickBooks work smoothly for your business. And moving on to modules 3 and 4, or weeks 3 and 4, which is the same, we explored two key areas. On module 3, we focus on tracking income and expenses, where we emphasize the importance of categorizing transactions correctly for accurate reporting. And then on module 4, we introduce reconciliation and financial reports, ensuring that your data is accurate and that you can generate financial insights for a better decision making. And these steps helps keep your records organized and provide you valuable financial clarity. Let's now address some common challenges users face in QuickBooks. And here you have some frequent asked questions like, how do I categorize transactions correctly? What if my reconciliation doesn't balance? Or how do I customize reports for specific business needs? These are common issues, and it's normal that sometimes you have some trouble with that. It's really important that understanding that troubleshooting will help you manage QuickBooks more efficiently. So don't hesitate to review the content from the previous weeks to make sure you understand all these questions. Let's take a deeper look at profit loss reports because it's one of the most important financial statements in QuickBooks. The profit and loss statement shows your income, expenses, and net profit over a set period. And some key questions to ask when reviewing this report could be, for example, are my expenses higher than my income? What trends do I see in my revenue? By running this report, you will be able to evaluate business performance and make better financial decisions. So it's really important you understand what's behind these reports and get the knowledge to be able to answer these questions you may have during your process. And now we're going to reinforce some key financial and accounting concepts we have covered in previous weeks. And we will start with profit and loss statement, balance sheet, and cash flow statement. Because as you know, they are essential for understanding business performance, financial stability, and cash movement. As we mentioned a few slides ago, profit and loss statement or income statement, which is the same, gives a summary of business financial performance over a specific period. So it's really important that you understand what is behind this, and if you have any questions, any doubts, go back, review content we have already worked on to make sure you are following the right steps. And for example, some key questions it may arise once you run this report is if you're generating more revenue than expenses, or what areas of business are most profitable. The balance sheet is another key report, and remember, it provides a snapshot of a company financial position at a given time. And some questions you may have running this report are if you have enough assets to cover liabilities or if your equity is growing over time. So this report is crucial for assessing financial stability, planning for growth, and securing loans or investments. And then we have the cash flow statement that tracks how money moves in and out of the business. It breaks down cash flows from operating, investing, and financing activities. And key questions to consider when running these reports: do I have enough cash to cover expenses? Are there any periods of low cash flow? This statement helps business anticipate cash shortages, manage liquidity, and make better financial decisions. And some common QuickBooks mistakes and troubleshooting tips that we would like to discuss with you and to show you are the following: incorrect categorization, unreconciled transactions, missed filters, missing transactions, and reconciliation issues. Among others, these are mistakes that you may have, that you may find, and it's really important keep this in check to make sure accurate and reliable financial records. Let's now move into the hands-on activity. This will help you apply what we have learned about inventory management. Remember, since we are using the simple plan, full inventory tracking isn't available, but we can still add non-inventory items to track sales and expenses. And here are the steps to complete this activity. As I mentioned before, we will go through it in another video, and we will include that video in Canvas where you will have access to review it and go through the activity. And as we wrap up, we want to talk about how you can continue learning and improving your QuickBooks skills, because there are many resources available to help you explore deeper features and troubleshoot any issues you encounter. So here, there are some useful resources like QuickBooks Help Center for facts and step-by-step guides, QuickBooks certification courses to enhance your knowledge, community forums where you can ask questions and learn from other users. And an important one is YouTube tutorials. Will provide visual step-by-step guides for QuickBooks features. YouTube is a great tool to see real examples and solutions in action, and you have a bunch of videos that are really interesting to keep learning about QuickBooks. So use these resources to expand your knowledge and solve. And that brings us to the end of this week 5. Thank you for your participation, and we encourage you to keep exploring about QuickBooks.